George of the jungle, strong as he can be.
So where does mortgage money come from? That's what we're going to be discussing in thecreditjungle.com today. This is George Anderson, and thank you for joining us. And a lot of people think that, like, well, I'm going to go to my bank and take out my loan from my bank because I've done my checking and my savings with them, and I have maybe even my insurance through one of their affiliates, so they're going to give me a better deal and they won't require as much stuff to be able to do a mortgage loan for me. Well, that's not true. So this is going to be a two-part video, and the first part here we're going to discuss, where does the actual mortgage money come from? It is not depositors at the bank. Your deposit money that's sitting there in a demand deposit account at a bank for a CD or something like that, that is not the source for mortgage money. So traditional mortgage money, and we're just going to keep this simple, and we're going to stick with the main three secondary mortgage market consolidators, who are Fannie Mae, Ginnie Mae, and Freddie Mac. This is Federal National Mortgage Association, Government National Mortgage Association, and Federal Home Loan Mortgage Corporation. So these are the entities that basically establish the guidelines. So when somebody says, well, the underwriter wants to see, fill in the blank, okay? Each of these agencies has guidelines that they will set up to be able to qualify someone to be able to have that money lent out to them. And then you have some other entities like FHA and VA that they will either guarantee the money or they will insure the money in the case of FHA or in the case of a private mortgage insurance company. But again, they're not the ones lending the money, they're the ones who are insuring the money. So just think about your car loan. You have a loan from the bank, but you have insurance through an insurance company. Does the insurance on a vehicle loan that has comprehensive and collision on it, does that protect you? No, what that does is that protects the loan that the bank gave. So the same thing here. Mortgage insurance, whether it's private or government mortgage insurance, is protecting the source of the money, where it came from. But do Ginnie Mae and Fannie Mae and Freddie Mac, do they snap their fingers and make money? No, they don't. But they issue what are called MBSs, or a mortgage-backed security. A mortgage-backed security is a bundle of loans that are put together, and I know that this is probably triggering some people back to 2007 and 2008 when all of these loans were being bundled in tranches and sold and everything else. Well, these were by and large part, these were alternate mortgage products that were outside the realm of this, but there were also a lot of guidelines that had gotten quite loose and crazy, during that time period. And so a lot of these loans went bad, but more of them were what you call some of your subprime loans and things of that nature, alternative documentation. But anyway, so Fannie Mae and Freddie Mac, where do they get their money from? Okay, well, if you have a 401k, or if you have mutual funds, or if you have any type of an insurance product that invests into some underlying products, you're going to see that you are, part of the source of this money is you. So mortgage-backed securities, okay, so this is going to be here mutual funds. So some of the money that you invest is actually being invested into mortgage-backed securities, and that goes into this pool. Another source of this would actually be foreign investors. And yes, China does hold a lot of mortgage-backed securities. They hold a lot of our mortgage debt. And then the other one, we actually, to a smaller degree, well, not so much, but we actually have the Federal Reserve. And then other banks as well, they can, as part of their collateral, they can purchase mortgage-backed securities and hold them as an asset. So in an indirect way, some of the money that you have in your demand deposit accounts would be in there, but I'm just trying to simplify things a little bit. So you may be lending yourself some of the money that comes back out on a mortgage loan. And so this is just kind of the flow of the consolidation of, this is where the guidelines are created. In other words, if you want to be able to sell a loan to Fannie Mae or Freddie Mac, you have to be able, there's this side of the pie that we're going to discuss in the second video, but this is where the money comes in. This is where it gets packaged and codified and underwritten and everything else. And the next video is going to be discussing, well, how do you as a consumer, what are the channels that you access this money? So hopefully that explains just a little bit of how this process works. And for those of you who like to study and have these questions on your mind, there's a lot more levels that you can get into beyond this. But I hope this is helpful for you. Thanks for coming into thecreditjungle.com today. This is George Anderson. Remember, you can push button, get mortgage professional, and I look forward to talking with you and answering any of your questions. Have a great day.